The broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, Preston Brent here with our weekly roundup. This is for the trading week ending January 19, 2018. Well, what a interesting few weeks we've had here, really starting after the year-end holidays going into the new year. We've just been on fire. Now, what I've got on the screen here is a weekly chart of the S&P 500 E-mini futures. And you can see on the top of the screen here with the chart where we had a little bit of volatility introduced to the market a couple of times back in 2016. 2016 was really the last year that we had any sense of volatility in the market, to be perfectly honest. And if you guys remember, at the beginning of 2016, the markets fell 10 to 15%, depending on the index, and we had a pretty good pop in vol. And then we had the Brexit vote on 23 June. You can see the pre-Brexit vote. The E-mini was at 21.19, and the post-Brexit vote, it went down to 1981 over the next day or two, and then immediately started taking off again, and then hit a high right around August, the middle of August, and then it started selling off going into the presidential elections here in the US. And then you can see the overnight Trump election lows at 2028. Once Trump won and it was clear that he won, the markets took about, I would say, an hour or two to settle in, and then it took off. And it hadn't looked back since. I know this because I had our members up at 2 in the morning. We were trading the Brexit vote and we were trading the Trump win vote. And if it had been Hillary Clinton, I suspect the markets would not look like this, although there would have been some plays that we would have made. So from our standpoint, we were ready to make the play based on who was running and who won. And when Trump won, I think it surprised a lot of people, but we were ready. In fact, we had our long plays lined up if Trump won, and we had our long plays if Clinton won, and vice versa. Our shorts if Trump won, and our shorts if Clinton won. So our game, the name of the game was to make money in this move, and boy, have we been successful in this. You can see this tight channel moving up, and then over the past 4 weeks, we've just exploded higher. You can see here the 2018 open is almost right at the 2018 low for the year. We haven't looked back. We just made highs, all-time highs going into this long weekend, even with the prospects of a government shutdown at 28.15. We really opened the year, and it seems like a long time ago, but we opened the year right around 26.75, and we're already at 28.15 in literally a 3-week period of time. These are decade-old records that we're beating, one of the fastest starts to the year that we've seen. Okay, now, as you guys know, and if you're relatively new in trading, you got to be very careful of chasing your tail here. One of the things that does concern me, if we look at the RSI right here on the screen, I mean, look at that overbought situation there. We're sitting at 89.23, and this, folks, is not a daily chart. I'm seeing this on the weekly chart. To see that level of overbought on a weekly chart is amazing. And yes, we can stay above the overbought level for weeks at a time, months at a time, in fact. But when we get to an extreme level like this, you got to look at this and say, all right, there's something going on here, and we got to see a little bit of a counter move here. I think that would be essentially very healthy for the market to have something like this. In fact, let me show you something here, which I was just looking at on the chart. It's hard to believe, but if we go all the way back, and let's just kind of reduce the chart down here, and let's go all the way back, and I mean way back here, and let's just take it down. Looking at this weekly chart, right? I'm going way back on the S&P 500 E-mini futures. My chart, now I can go back longer, but on my chart here, the data that I've got takes me back to 1997. And if you look at this chart going all the way back to 1997 using a weekly chart, right? you can see here that the next highest was right here. And that only put us right at about the 80 level, right there. We're well beyond that up here. We're at the 89 level. We have not been this high ever, at least going back to 1997 on the S&P 500 futures. It really is just amazing, the level that we've attained here. And what we're seeing here is the markets essentially going all in on a situation where they don't want to be left as the last man standing, okay, or the last fund standing, because the markets are taking off. So there's kind of this, what you may have heard the term, FOMA. I've used it here many, many, many times in the past, the fear of missing out. So that has driven a lot of funds to come into this. But probably more important and very interesting is driven a lot of retail traders into the markets. Retail traders are always the last to show up at the party. They're always last to come in on the peaks of the longs, and they're the last to sell in the valleys of shorts, which means they take it in the shorts, so to speak. They get punished more than anybody else. And when you see this level of euphoric uh, uh, exuberance in this market, it really, I mean, it just amazes me. I mean, I'm looking at this and I'm like, wow, this is totally amazing, totally amazing. Now, let's go take a look at it from another perspective here. Let's come back in, let's zoom in, and let's get rid of the weekly, and then let's just go take a look at it from a daily standpoint. If we look at it from a daily, and we'll just kind of zoom in here, you can see this upsloping channel that we pretty much stayed in for the year 2017. Yes, we ventured out once, the end of February at the beginning of 2017. And then we really started to get outside this channel right around the beginning of January. And it's all of a sudden, everybody just woke up and said, let's get long. And if you'll recall, this was when the tax plan was going through and right about this time. So we're having a lot of adjustments in earnings per share for 2018. A lot of analysts have come out and upped their earnings forecast. Earnings are coming in so far, and we're just now getting into the thick of earnings for Q4 of 2017 now. And we're going through these earnings and all these analyst upgrades. We're looking at earnings coming in, again, double digit, anywhere from 12 to 15% in Q4 of last year. So when you mix all of this together and put it in a pot and put it on boil, you've got a boiling hot market. You've got the markets trying to calculate where everything is going to be. In fact, most analysts have come out and said that provided we do not have a geopolitical event like trouble in the Korean Peninsula or China does something really crazy, always seems to start in the Asia Pacific area, okay? And provided the Feds and the ECB don't go crazy with their tightening, then the markets are forecasted to be anywhere from 31 to 3,200 in the E-mini S&P 500 futures, and around a 29,500 to 30,000 Dow. So this is why we're seeing this rush right now of money coming in. Now, again, this can all change, but I do believe we will have introduced in 2018 a little bit more vol than we had in 2017. But right now, we're just getting a lot of pin-up money coming in as we're going through Q1 earnings, okay? And if we zoom in a little bit more, you'll see that we're well outside of the channel, the upsloping channel that we were in for the bulk of 2017, right? And that channel basically is defined as an upward vector with that kind of angle like this. Now you can see the angle is like this. So typically, when you get towards a peak, the rate of ascension, in this case, the angle of ascent, starts to get steeper and steeper until it can't sustain it. And then we go into a consolidation mode. And then in that consolidation mode, the markets have a period of rest and relaxation. and then it decides, okay, what are we going to do from here? Is there enough impetus and more news to take us up, or are we going to sell off a bit? Okay, so I'm going to expect over the next couple of weeks a little bit of a consolidation mode here. Okay, now understand, as I do this, I don't know yet if there is going to be a government shutdown or not, or a partial government shutdown. The White House right now is giving it a 50-50 shot, slightly better than 50-50 that they'll remain open. But you never know with these politicians. All I did before we went into close is I picked up some long VIX calls just in case we shut the government down, because on average VIX goes up about 10% 5 days from a government shutdown. That is the average that we've seen with every government shutdown that we've had. I think it'll go up more than 10%, but at least a 10% bump. So I picked up some VIX calls. If we don't shut down, then I'll just lay those calls back off the table again, and I'll wait for another entry at a later date. But this is kind of what I'm looking at right now. I mean, everything is through the roof, guys. There is really nothing on the horizon that I see on these charts that would stop this rate or this ascension of the markets moving higher. Absolutely nothing. The only thing I see is a little bit of a sideways consolidation pattern. And I know a lot of people have been trying to short this market. I think they've given that up, and now they're going to wait for a little bit better of a signal before they start shorting. But this is what I see here. Okay, I mean, I see this. Now, if we look at the Russell, which is small cap and mid cap, you will see here that on this daily chart, we're also near the highs, but the RSI has worked off from these overbought situation. Excuse me. And we've got actually a bearish divergence here on the Russell futures. All right, and if we look at Nasdaq, you'll see, excuse me, you'll see Nasdaq here. You'll see that there isn't really no bearish divergence here, and we finished at near the highs on Friday with Nasdaq. And then, of course, if we look at the ever-present Dow, I mean, look at this thing, guys. We finished at the highs. There is no divergences here. The markets seem like there still wants more money to come in, right? And so we finished on a positive note, even given the potential of a government shutdown. So, like I said, I don't see, and I've been saying this really going into 2017, and from Q4 of 2016 to 2017, I've been telling all of our members, any dip, folks, you got to buy. You just have to buy. It's just what the charts are telling us. And that's what we're doing. At some point, it's going to roll over. But I can't call that point right now looking at the chart. But I'll be able to tell our members once I start to see some price action coupled with volume and timing where it tells us that we could begin to roll over. So this is what I'm looking at right now. Okay. And if we look at one of the things that I'm looking at here is the bond market. Bond market, you can see here we made new lows for 2018 right here. Okay. That is ominous. I think the bonds are going to go much lower. You can see we're on an Elliott Wave 5 right here in the bond market. You can see my projection is down to around 140 down here. And as I said, I doubt we'll get there in one straight line. We're going to have some chop. But I do believe we're going to come and take out the 2017 low, right? That'll provide a little bit of support in this shaded zone, and then we're going to go lower. All right, that's the bond market. That means interest rates are going to go higher. And if we look at the 10-year interest rates right here, right, look at that. We're at 2.63%. If I take it back out just a little bit and put a little bit of a resistance point on this, let me just draw this out a little bit so that you can see it a little bit better, right? Right in this area here. That was a previous pivot point. We took it out today. Oh, I got to sneeze. Hang on a second, guys. Oh, excuse me. So you can see here in this area here. In fact, what I'll do is let me just highlight it on my chart just a little bit. Let me use this thing right here, see if this will work. Right about there. Right in that area there. There we go. So that's where we're sitting. Let's take it to a weekly chart here. Here is where we're sitting. We just broke out. Now, for me, I'm not ready to call a bear market yet in the notes, treasury notes, or the bonds until the 10-year breaks this downsloping trend line. This downsloping trend line, guys, is an FYI. It goes back quite a bit. If I put it, this is a weekly chart, right? So if we look at this weekly chart and I go back in time, I mean way back in time. All right, let's take it even further back. This is a weekly chart of interest rates. And I'm just really compressing this thing now, but I just wanted you guys to see the point here, like this. I started this thing back in 1994. Now, this could have gone back to the 80s, because for those of you that are old enough to remember, we had interest rates in the high teens. It was a teenager interest rate, all right, essentially. But you can see here that we've had trouble breaking this downsloping line. We're now coming up on that point. We break this line, downsloping line, all bets are off. I am saying our theme, one of our investment themes for 2018, is higher interest rates, lower bond prices. And that's where we're coming to in this shaded zone right here. Let's go back to the daily chart. So for our members, we're going to be playing this. It's going to be a fun year for us as we play this particular trade here. All right, you can see how we gapped up in that price here. So again, these are interest rates, and this is the price action and the way the charts look, right? So I think we're going to go higher in interest rates, lower in the 10-year and the 30-year. Currencies, well, it's doing what I said it would do, right? If we go look at the dollar index, it's up a little bit today, but we're right at my support point, right at 90.14, okay? I don't see any bullish divergence. I think we're going to chop around at this low right here for a bit. And then once we finish chopping around at these lows, you don't see it on here, but there is the 2018 low right there. I think we'll go lower. But for now, we're going to kind of chop around here just a bit, okay? The euro is just the opposite. It runs the opposite of the dollar index because it comprises a big value. Now look at the euro here. Remember what I said? I said if we break this regression channel, we're going to run up to this area here, and we did. And here's the area, and we actually went higher. We actually went up to this level right here, 123.68, and now we're sitting here. This is going to be a strong resistance point, but I do believe we'll consolidate for a while, and then I think we'll move higher. All right, so that's the euro. We've also got a play going on in the British pound. I'm watching the Canadian loon or the Canadian dollar, or the Aussie dollar, and the yen. So there's a lot of different things here that in 2018 are going to be a lot of fun for us. Gold. Gold is on this very subtle move higher. We have a high price of 1345. We subtly took out this prior pivot. We took out this zone here. In fact, we opened the year at 2018. We opened at 1305. And we're going to chop around here a bit, but I do believe gold is going to go higher for the year. Okay. And then with energy, well, we just closed down the other day, or today, or yesterday rather, trade number 23 for 23 trades, 23 profitable trades in the oil futures market. You can see here oil had its worst pullback in a week than we've seen over the previous 4 weeks. This is nothing more than just a consolidation. That's all it is. We had such a huge move higher that we're consolidating these gains here. We got OPEC meeting over the weekend, and they're going to come out with their pontification probably Sunday evening or early Monday morning. We'll get that, and then we will be going into another trade. We've got a current trade still running. That's a holdover from 2017. We got great profits in it. Once we shut that down, assuming the markets don't move up or down more than about 6 points, $6 a barrel in the next 3 weeks, I don't see that happening, and we can always adjust it. That'll give us 24 for 24 successful trades, right? And we played this in both bull markets and bear markets in the oil market. So our trading methodology and our adjustment styles are giving us some really good trades in the options market with oil. Okay. If we look at gasoline, same thing. We had that breakout. It kind of looks like the other chart I showed you there on the euro. So if you look at this, gasoline broke out and it's moving up to my target zone right here, my resistance point right around $1.93. Okay. And this has given us a nice play here. Now, once we get up in this area, it's going to be choppy and we'll go sideways. We may even pull back a little bit. But once it consolidates and then breaks out again, that will be another entry point for us. We just shut down a trade in gasoline at profit. So we're having a good time. We got a lot of other things that we're looking at in the ag market, the meats market, the softs market, in the commodity world. We're also looking at some things in the stock universe. So we got a lot of things going on there. So just a really fun time as we're kicking off this year. I do believe this year is going to give us some downside action. We're going to have fun in that. If you're not a member of our group, I highly encourage you to come and check us out. We're doing well. We're running also our Option Masters Education Series. That's another home run for us. We got a lot of people that are attending that. If you're not in it, I again urge you to come check us out. Otherwise, have a great weekend, everybody. Members, I will see you members this Sunday night for our weekly market watch for the upcoming trading week. All right, everybody, have a great weekend, and I will see you guys later. Ciao, folks.